Most UK accountants are not R&D tax specialists, and most of them will be the first to admit it. I've spoken to hundreds of founders and finance directors who discovered they were eligible for R&D tax credits, not because their accountant told them, but in spite of it. HMRC paid out £7.4 billion to 46,950 UK companies last year. If your company is not one of them, the most likely reason is not that you do not qualify, it is that nobody told you to look. In the next 8 minutes, I am going to explain exactly why this gap exists, what general practice accountants are and are not trained to advise on, and most importantly, what you should do if you suspect your company may be eligible but has never claimed. No blame, no jargon, just a clear explanation of how this part of the UK tax system works and why so many eligible businesses are leaving money unclaimed. This video features an AI-generated presenter. All content is for educational purposes only and does not constitute tax or financial advice. Always consult a qualified R&D tax specialist for your individual circumstances. Let me start by being precise about the problem. UK accountancy is a broad profession. The typical general practice firm, the kind that handles your year-end accounts, your VAT returns, and your payroll, is trained across the full spectrum of tax and compliance. That breadth is exactly what you need for most things. But R&D tax credits sit in a specialist corner of corporation tax that general practitioners rarely encounter in their day-to-day work. The rules are technical, they change regularly, and a claim requires an understanding of HMRC's definition of qualifying research and development, which is drawn from the CIRD Manual and is not intuitive. The HMRC definition requires a project to seek an advance in science or technology and to resolve a genuine technological or scientific uncertainty. Those are precise legal concepts. Getting them wrong either means leaving money on the table or, if overclaimed, attracting an HMRC inquiry. That combination of complexity and risk means most general practitioners will refer you to a specialist rather than advise you directly. The problem is that the referral does not always happen. Let me put some numbers on this. HMRC's most recently published R&D tax credit statistics for the tax year 2023 to 2024 show 46,950 claims were made, with total relief paid of £7.4 billion. That sounds like a lot of companies, and it is. But put it against the backdrop of the UK business population. There are approximately 1.4 million active limited companies in the UK. Even accounting for the fact that most do not conduct R&D, independent analysis consistently suggests that somewhere between 200,000 and 250,000 UK companies are potentially eligible, and fewer than 50,000 are claiming. That gap between those who qualify and those who claim is the accountant knowledge gap made visible. Now, I want to be fair to general practitioners here. There are several legitimate reasons why your accountant may not have raised R&D tax credits with you. First, they may not have sufficient visibility into your technical activity. An accountant who sees your profit and loss statement and your balance sheet does not necessarily know that your development team spent 6 months solving a problem that had no off-the-shelf solution. Second, they may have raised it and the conversation did not land. R&D tax relief can sound like something for pharmaceutical companies or university research departments, not a 30-person software business. Third, they may have been cautious. In recent years, HMRC has increased scrutiny on R&D claims following a wave of abuse by high-volume claim factories. That scrutiny is legitimate and necessary, but it has made some practitioners more reluctant to initiate conversations about R&D relief, even with clients who have strong, clearly qualifying claims. So what actually qualifies? HMRC's guidance, published at gov.uk and expanded in the CIRD Manual, defines qualifying R&D as work that seeks to achieve an advance in overall knowledge or capability in a field of science or technology by overcoming scientific or technological uncertainty. That definition is deliberately broad. It includes developing software that solves a genuinely novel technical problem, building systems that combine existing technologies in ways that do not have a ready-made solution, and engineering processes that require iterative experimentation because the outcome is not predictable from current knowledge. What it does not include, building software using well-understood methods to a known specification, applying existing frameworks in routine ways, or carrying out commercial feasibility studies. The distinction matters because the eligibility test is about what your team is doing technically, not what sector you are in or how innovative your product looks to a customer. A management consultancy that builds genuinely novel data processing tools qualifies. A software company that assembles standard components may not. That is a nuanced judgment, and it is exactly why a specialist, not a general practitioner, is the right person to make it. Here is the practical step. If your company has developers, engineers, scientists, or technical staff working on problems where the solution was not obvious at the outset, the right action is to get a specialist review. Not a self-assessment, not a conversation with your existing accountant who may not have the training to evaluate it correctly. A specialist who works exclusively in R&D tax, who knows the HMRC inquiry patterns, and who can tell you plainly whether you have a qualifying claim and what it is worth. Let me bring that together. The gap between the companies that qualify for R&D tax credits and the companies that claim is not primarily a question of eligibility. It is a question of awareness and expertise. General practice accountants serve their clients well across a broad range of compliance and advisory work. R&D tax is a specialism that requires dedicated training, current knowledge of HMRC guidance, and familiarity with the inquiry risk landscape. If your accountant has not mentioned R&D tax credits, it does not mean you do not qualify. It means it is worth getting a second opinion from someone who works in this field specifically. The average SME claim in 2023 to 2024 was approximately £66,000. That is a meaningful sum, and it is available under existing law, not a loophole. If you want to find out whether your company qualifies, Uplift Tax has a free specialist assessment. No win, no fee. It takes about 5 minutes. A specialist will review your technical activity and tell you whether you have a claim and what it could be worth. The link is in the description below. If you found this video useful, the next one covers the specific qualifying tests for AI and technology companies. See you there.